What's up, everyone? Welcome to another halftime report. I'm Dave Savage, and I am interviewing Tony Blodgett. What's up, Tony?
Hey, Dave. How are you, buddy?
I'm doing good, brother. So I think I've been telling everyone that I'm not doing any more of these interviews. So just heads up, anyone that's been watching these halftime interviews, I just can't stop. There's just too many amazing people to ask questions about in terms of it's halftime. It's June of 2022. It's a pretty unprecedented year in the mortgage business. Definitely a shift from the past 3 years. And I'm also moving back. I've been telling everybody that, hey, I'm going to release this halftime report by June 15th. No, I'm going to release it by the end of the month. It's turned into a bigger project. I want to make sure, well, Kristen Messerly and I together want to make sure that the content is tight. We want to make sure that we've got lots of contribution from folks. We want to make sure that there's some of the best graphs and charts for every trend, for every data point. We just want to really do it right. So we've taken the pressure off ourselves. The report will be published on the Mortgage Coach blog, as well as any place we can get it on social media. So Tony, you've watched a few of these interviews that I've done?
I have seen a few. Yeah, they're great.
You liked them?
Yeah, it's fun.
Yeah, I've been getting really good feedback about it. And I'm surprised, like, people that don't usually comment on our content. I mean, every level of success in the mortgage industry, I've gotten some just incredible feedback on it.
Well, I think it's really helpful to hear from everyone during times like this. We can kind of feel like we're in a vacuum, like we're the only one dealing with the challenges of the market, right? And so to know that, hey, look, we're all on the same page. We're all working through this together. That's what I like about it, is just hearing different people's perspective. And it's also inspiring. It gives you ideas on what you might want to be doing different in your business that maybe you hadn't considered. So,
yeah, well, I am looking forward to asking you these three questions. Before I do that, I just want to, one, make sure people know who you are. When I first met Tony, he was, I think he was a head of production. I know he was in leadership. He was still a producer, like pretty big deal producer. And if you've ever seen me present on a stage and I show a yellow sheet of paper, like, hey, this is how I used to do loans back in the day, that was Tony. That's how Tony presented options. And I talked him into giving, well, actually I have to talk him into it. Like, I showed him Mortgage Coach. He's like, yeah, I'm doing that. And not only did he start doing it, but he signed up for all his loan officers. And he's always, just ever since that day or that week, been an advocate for Mortgage Coach. But Tony, if you could just give everyone a minute on who you are and what do you do?
Yeah, and to clarify, that yellow piece of paper is literally out of my notebook. That was one of my yellow pieces of paper, right? So
yeah, it didn't have a social security number on it,
no,
or a name, so I figured it was cool.
Awesome. Well, yeah, absolutely. So I'm Tony Blodgett. I am the Executive Vice President of Retail Production at New American Funding. I've been in the mortgage business now for 26 years. Kind of spent the first half of it, like you said, doing production. I actually started using Mortgage Coach, Dave, earlier, and then kind of got reintroduced to it when you rolled out Edge and kind of the new platform today. And that's when I really got excited, and happened to be in a position at my previous company where I was able to influence the decision to roll it out to all of our loan officers. And we've done that here at New American Funding recently, as well as given all of our loan officers the opportunity to partner with Mortgage Coach. So,
well, I appreciate your leadership. You've been a great help at changing the industry, turning loan officers into advisors. So let's get into it. So every time I've ever seen the market pivot, it's usually just been horrible. Like, how do we survive in this market while it is pretty rough? Especially, I mean, today, I don't know if they're still down 99 basis points. Let me pull out the Rate Watch app. But I know a little while ago, 99.31 basis points. It's ugly. Rates are up. Yeah. Tony, you like Rate Watch?
I love Rate Watch. Look at that graph, though. That graph is like scary, man. That's not cool. Yeah.
No.
Rate Watch is one of my favorite tools. It's never more than just a click away. It's right on my home screen. So
yeah. So and rates had already gone up 2% in 2 months. And so that's a bad data point. But there is opportunity. So let's start with, and we want to land on opportunity. We've got another 15-ish minutes. I want to land on what are the 3 top opportunities for local referral-based mortgage professionals. But what are some data points, some bad ones and some good ones from your perspective?
Well, look, the good news is that as a result of rates going up, the purchase market hasn't completely crashed, right? I think it's slowed down a bit, which is allowing inventories to come up. So that's what I see as a pretty significant opportunity right now. Is we've had a lot of clients over the last number of years that simply couldn't find the home that they wanted. Rents are still going up. There's more inventories. We're seeing price reductions. So the process of getting into your first home, from that standpoint, from a competitive standpoint, I think is becoming easier. Now, obviously, coupled with that is the higher rates, which make it more expensive. But I think for the families that can afford to go find their home today, and find a home that really meets their needs. I think a lot of people sacrificed and made decisions to purchase homes because it was the only thing available, or they had lost out on so many other opportunities. They really settled for something that wasn't maybe the best home for their family's needs. So if you can get into that home now, there's more opportunities to do that. That's the good news. And I think that there's opportunities for loan officers specifically, but also for the clients themselves, to restructure these loans at some point in the future. What we know with a pretty high level of certainty is the Fed, we saw it today with inflation. The Fed is not going to be able to stop their battle against inflation. So rates are going to have to continue to rise at that level, short-term rates, to slow down the economy. And as a result, it is going to create more than likely some version of a recession if we're not already in it. And we know that typically brings about lower rates. So that's another, reality of today's market, is that every transaction that you're working on today is probably one or more in the future. And I say one or more because, you get to restructure that loan when rates come down, but there's also going to be a lot of orphaned, what I would call orphaned, borrowers out there whose loan officer didn't make it through this cycle. So I think there'll be lots of opportunities in the future.
Yeah. So let's summarize, guys. And Kristen, since you're not on this, we'll transcribe it. We definitely need to get a graph to show inventory is up. So we'll figure out how to put this when we, roll out the blog post and the article that will be all over the place. Like, what is the best image and graph showing how inventory is up? I would recommend all you loan officers on this, you're in a local market. We're going to show something that's local, not local, but macro. You need to make sure you've got great images to have this conversation in your market. Rents are going up. Like, I have yet to interview anyone that doesn't say if the biggest, most confident thing we're all clear on is that rents are going to continue to go up. So guys, that means investing, in duplexes, fourplexes, investment property. It's going to go up, not only from, regular people and entrepreneurs. Institutions are coming into this. My son is going to go to Chapman College, and we were trying to buy a triplex, and Chapman University overpaid for it. And they're gobbling up everything within a mile of the school. So rents are going up. Equity is up. Credit card. Now, this is not a positive trend. This is obviously not good for America, but credit cards are up. And that means, guys, debt consolidation loans are up. That's an opportunity. And then the last metric that you just called out, and that rates are going to be lower again someday. So let's do it while it's good. And then let's position ourselves for tomorrow. Any trends, that you want to call out before we get into opportunities? Any just trends that are happening that you want to call out?
Yeah, well, I think that we're seeing a lot of, there's a couple trends. One, margins have thinned out, significantly everywhere. And we see this now with the publicly traded companies, where we can look at what they're making. And the reality is they're not making money. So they're choosing the thin margins to capture market share, even at the expense of making any sort of a profit. So that's a trend that we have to deal with, is we're competing against some of the largest mortgage companies in the country that turns out are willing to do loans at no profit. So how do you deal with that? That's one trend. And I think that it comes with bringing value. That's why a mortgage coach tool has never been more important, in my opinion, to be able to show your clients why you're more valuable than, the Rocket or some of these other lenders who are willing to operate at a cost that just, is not profitable. The good news is that's not sustainable long term, but it is a reality of what we're dealing with in this shifting market. The other trend I see is shorter term options like ARMs, 5 and 7 year ARMs, and it's difficult right now because I do feel like some of the banks have an advantage in this market because you just don't see Fannie and Freddie really wanting to pay up for those ARM products at this point. And so if there's institutions out there that are willing to hold that on their books, then you're going to see a better price. So it's incumbent on us as independent mortgage bankers and even for brokers out there to find the outlets for these products that are going to give your sales team, your loan officers, the tools they need, because buyers are more willing to take a product like that, especially when we can show them that there's going to be a chance to most likely refinance into a lower rate in the future. So that's an absolute trend that I see as well.
I want to pause there real quick. So Kristen, let's, we had, Garth Graham, Rob Chrisman, and Sue Woodard. So we had 3 people from Stratmore that we interviewed for this. Let's make sure we get some good graphs and charts on margins. I don't know if we could get anything to show the trend on ARMs, but I bet we can. I mean, that stuff is being recorded. Let's try to, find out how we could do that. And then you didn't call out the omni-channel and the digital transition, but guys, everybody needs to focus on that. Hey, one quick question, Tony. On a lot of these, one of my takeaways, I'm starting to write the playbook, and I'm starting to feel like the mortgage industry obsesses over how many loans did you close, what was your volume, and that every company has a scorecard, in a way of showing that, and loan officers, they know who's number 1, 2, all the way down to the bottom. What are your thoughts on starting to add conversion? And I'm not saying those are not the North Star of success, but there's more stars in the sky. What are your thoughts on conversion, profitability, customer satisfaction score, and literally dashboarding that so that, hey, I want to, you work at a company, who the most profitable loan officers are. They're competing to be like who costs the least amount of basis points. They're, like we know who the best converters are in a company, and we're celebrating. So we're making that data part of the scorecard, and we're celebrating those things just like we celebrate the biggest unit producer, the biggest volume producer. Any thoughts on that?
Yeah, well, I think a lot of it is being tracked, by companies. It's just maybe not something that's being presented out to loan officers like we put out top producer numbers, right?
No,
like,
I know it's being tracked, but what do you think about making it more transparent?
Well, I mean, I think
it's something we celebrate.
Yeah, well, I think that, when it comes to leads that are provided by a company, conversion is something we track very closely. We're a company that has the opportunity to refer a lot of leads out to loan officers. And so we have to track conversion on that piece of it. So, when there's leads involved, it is in front of everyone's face. But yeah, I think that for all loan officers, we should be, I would love to see us move more in a direction as an industry that we celebrate the other aspects of the process besides just the volume number, because that doesn't tell the whole story.
Agreed. And by the way, what do you think of this idea that one way to track the conversion is credit report versus funding? So we know who runs credit reports, we know who funded a loan, and we could just have a credit report versus funding score. Is that?
Absolutely, because we also know that the people that pull the credit reports actually close. I mean, pulling someone's credit is a direct correlation to whether or not that transaction is going to close. We track that very closely in other parts of our business. So we know that to be a super important one.
All right. Well, I'm going to, I can tell you already, guys, one of, the structure is going to be data points, trends, opportunities, recommendations. And I know one of my recommendations is the more we can celebrate who's got the best conversion, who's got the most profitable. And you guys do a great job, with experience.com of tracking customer satisfaction, but literally putting those together. Okay. Any other trends before we transition to opportunities?
No, I mean, I think that things that I'm looking at, and from my position is I see trends where you're going to see, I think there's just going to be more merger M&A happening in our industry, and I don't want to speak to kind of my thoughts necessarily there. But I think there's going to be companies that, because of the way they're structured or their size in this market, that are going to have a tough time shifting. We've seen it during every cycle. I went through that myself back in 2014. Working for a smaller boutique independent mortgage company. So, companies have to pivot. And as a result, some of them are going to decide, hey, it's been a great couple of years and it makes sense to align in a different way. So I think there's no doubt that a trend is going to be more mergers and acquisitions. We've already seen it recently with the Lend US and cross country thing, and there's more to come on that front.
Did you see my interview with Garth Graham?
I don't know if I watched that one.
So you should watch that. He actually called that out as a trend, but he said something that it was surprising to me. He said, hey, it is going to be a record M&A year, but he, with a lot of passion, I can't remember what the number was, there's going to be 42 integration or mergers this year, and the next year was like 30 something. So he was like, while there will be more deals this year, it's not like it's a tidal wave of deals, and that's what Garth said. So check it out. All right.
There's already been so much consolidation, right? I mean, there's so many.
No, I know.
Yeah.
So it's already played, but nevertheless, check out that interview. It was really good. All right. What are the biggest opportunities for local referral-based lenders and loan officers?
Well, I think right now, as much as, loan officers are feeling, I would say the pain of this market, so too are real estate agents. And so I think there is a lot of opportunity right now to partner with your real estate agents, and they're so open and susceptible to ideas and business planning. And there's just more ways, I feel like, today to go out and build long-term relationships with realtors than we've ever had, because they are open to the ideas, they're open to the partnership, they're open to the collaboration, and I think that loan officers should be capitalizing on that. There's more opportunities to go meet people at open houses, right? I mean, Dave, we went years without, you'd tell your loan officers, hey, go to some open houses, meet some new realtors. There literally wasn't open houses because houses were selling so quickly. Now, all of a sudden, I look at the listings, and almost every home that's on the market is sitting in an open house this weekend. So many opportunities to go out and build new relationships that just weren't as readily available in the last 2 years. And obviously with COVID, not as many people were doing open houses or going to open houses. So just those opportunities, I think, are profound.
One of the things I'm really pushing to our community, I talk about it every time, and I got the script from Jeremy, an interview a few weeks ago, is just call up a realtor and say, hey, if I could show you two or three, if I could show you an idea that would help you close 2 or 3 extra transactions over the next couple of months, would you give me 15 minutes? And then come in with one idea to show it. And, Mortgage Coach, we're saying, hey, show the seller buy down strategy. I mean, rates are going up. There's a lot of houses that are going to have their more houses, shouldn't say lots, but it is a growing trend that inventory is increasing and price reductions are growing. By the way, Kristen, let's make sure we put that trend in the final report, that price reductions are a growing trend in the market, and a seller buy down is a growing trend to help solve to that. And then we're also doing a lot of rent versus owns. Excuse me, not rent versus own, but move up TCAs.
Hey, Dave, one thing I noticed about the price reductions, because in many markets, it's over 50% of homes have a price reduction. And I think another opportunity here is to educate customers on the fact that just because there's price reductions doesn't mean that there's reduction in the value. Now, I do think there may be markets, obviously, that have some depressed values as a result of this shift in the market. But just because we're seeing price reductions, it doesn't relate directly to the fact that homes are going down in value. It just means that, the house wasn't priced properly, and with more inventory, there's more competitiveness. And that's why we see these price reductions. So I think it's incumbent on us as loan officers when we meet with a client to help them understand the data that they're reading, because it's all doom and gloom in the marketplace. And an opportunity for us with a client is to spend some time helping them understand what's actually going on in the local housing market. Because if they feel more confident moving forward as a result of the information you gave them, it's also going to make them more comfortable doing their transaction with you. So big opportunities there for education.
Roger that. Give me one more opportunity. What's another great opportunity?
Well, I think that I think there's opportunities to grow your sales force. I think there's a lot of there's just opportunities if you're a manager or if you're in leadership. I think that there's movement out there. People, when they're fearful, they're more open to that. So, that's, not something for a loan officer in particular, but I think that as an industry, you're going to see, people hunker down for the last couple of years, and now they're willing to look at other opportunities and other things that might be out there. So I think that's an opportunity for companies and for branch managers and people that want to grow their team. I think there's opportunities to bring really talented operations people onto your team as well. If that's something that you hadn't been able to find, there's been, layoffs in our industry, and where companies have to cut back, it leaves some really talented people that might be displaced. And there's opportunities to grow your talent pool right now if you weren't able to do that in this last cycle. So, just the disruption in the market creates opportunities if you can find them.
Let me ask you what you think of these two opportunities. So we're seeing a record amount of adoption of Mortgage Coach, and think of it, it was put under the package of digital presentations. And, because loan officers are getting rate shopped more. And, for 2 years prior, it's like fish were just jumping in the boat. I mean, I talked to a direct to consumer executive a few hours ago that passed on Mortgage Coach. And he was just saying, hey, it was like leads were coming in, we were having really quick conversations, and our conversion was good enough. But now, one, we're doing more purchase, and two, we're gonna really win these deals. So, for all you leaders out there, like, and many of you already have Mortgage Coach, but either if you don't have it, or you're just not prioritizing the teaching and training of it, you think that that's a good thing for executives and loan officers to put more emphasis on now in today's market. Any thoughts on that?
Like I said, I literally just rolled out Mortgage Coach enterprise wide to our organization. I think that it is one of the most important things that we could be doing. I've seen people are getting shopped more. I mean, it's been talked about in a couple of these interviews you've done, and I don't know of a better tool besides Mortgage Coach to combat that. The other thing that it does is, I just talked about, ARMs, the difference between a 7/1 ARM and a 30-year fixed, and showing a borrower these options. I mean, look, consumers are still afraid of ARMs for the most part. So if you are going to be selling a product that's different than the 30-year fixed, you have to be able to show them a side-by-side comparison of what the benefits are. I mean, there isn't a better tool to do that either than Mortgage Coach. And so for all of those reasons, absolutely, Dave, I don't need to endorse anymore. I mean, I think it's obvious to me, and that's why the timing was so critical for us to get this across the finish line and get this implemented right now, because I feel like loan officers, if they want to have the advantage, they have to be using tools like Mortgage Coach to help them win. And it just looks better too. I mean, it looks better.
Well, I'm not going to go into a Mortgage Coach commercial, but guys, it is time to do more training, to, not give a price exception unless the loan officer, like if you're a branch manager, go, oh, you want a price exception? Did you give them one of these total cost analysis, or did you give them the fee worksheet? And if they're giving the fee worksheet and they're costing the company a lot in price exceptions, it's time to get a little tighter. Now, what are your thoughts on this? Now that I am, Mortgage Coach and Boomerang are under the same corporate umbrella, I I've realized, I thought like a lot of lenders had borrower intelligence, or they had better borrower intelligence than I thought. And I also have learned that like no realtors have borrower intelligence. Like they don't have any insight. And I've also studied it more. And there's no doubt that Zillow and Rocket, they know who is in the money. They know who's most likely to move up and move down. And so one of my passions as an innovator in the industry is, and I was a shareholder in Sales Boomerang, is to get everybody with borrower intelligence. And there's two parts of this. While Sales Boomerang is the leader in borrower intelligence, I'm starting to realize that when you look at a loan officer's fintech, they got a CRM, they got mortgage coach, they've got borrower intelligence, and they have a home bot. They've got like literally a realtor's past customer database is better off in a loan officer's fintech powered platform than their own. So first of all, do you agree with that thesis?
Yeah, 100%. We currently aren't using Sales Boomerang, but we're looking at it, and one of the things that we've talked about, especially as a company that services our loans, it's important for us to make sure that we recapture those loans. I mean, we paid, to have that loan serviced. And so it's more important even for companies like ours. And there's a lot of us out there, Sales Boomerang retention in general of our book becomes really, really important. Also, of course, it helps our loan officers if we can give them the tools so that they also are recapturing that business back again. So it benefits the company and it benefits the loan officers to have a really strong retention strategy that makes sure that that business as it comes back is going through your retail loan officers. So I agree. And here's the thing is that there are companies out there that are trying to learn this behavior in other ways, right? We know about, online tools that can be used to try to, understand a borrower's behavior and then put offers in front of them through following them around on the internet. And, I'm not a tech guy, but we know that there's ways that companies can do that. So if you don't think that fintech companies are trying to find ways of figuring out what your borrower is going to do next and then put offers in front of those people to pull them away from you, then I think that you're kidding yourself. So we need to arm ourselves with the same tools that some of these, fintech companies are doing. And I think that a tool like Boomerang does that. It gives us that advantage without having to be a fintech company ourselves. We'll let them do the
Yeah, I'm trying to remember the Quicken has one. I can't remember what it's called, but it checks all your reoccurring payments. Oh, Truebill. So guys, if you're listening to this and tell me if you get this, you need to get your borrowers into your CRM. You need to get them into your platforms, like a HomeBot. You need to have borrower intelligence, like a Sales Boomerang. And then of course you need to use all these things. And so my last recommendation is build your database and retain your customers, because the biggest cost of every loan officer and lender is lost loans. You're losing them because your conversion could be better. You're losing them because your loan officers don't know the programs and products well enough, and they turn someone down that they could have funded. And then of course you're losing them because you're not driving all your best practices and you don't have all the tech you need. All right, Tony, last question. And you're actually the first person I've asked this question, but I'm going to start asking it. What's your favorite book and what did you learn from it? And I'm not looking for a long story. I just want to know, like, off the top of your head, favorite book and what did you get from it?
Oh my gosh. I have a lot of books.
Well, just in this moment, in this time, you can have a different answer tomorrow.
Well, I think one of the best books I ever read was Can't Hurt Me by David Goggins. And Extreme Ownership. Those are probably the two books, and they kind of run the same theme. And it's be willing to work harder than everybody else and take personal responsibility when things don't go the way that you expected them to,
Boom. That is what market we're in, guys. Never get outworked. Take personal responsibility. Hopefully you got value from this. If you did, give it a like down below, share it with both your loan officer friends and your C-suite friends. and stay tuned. By the end of this month, halftime, June, Kristen and I will be publishing 2022 State of the Mortgage Industry halftime report, and it's going to have trends, it's going to have data points, it's going to have opportunities, and then it's going to have recommendations. These are some things that we think you should be thinking about. Tony Blodgett, appreciate you, brother.
Thanks, buddy. Good talking to you.
All right. Have a good weekend, man.